Welcome to the Inside Startup Investing Podcast powered by King's Crowd. As always, I'm your host, Chris Lustrino. From discussions with founders and VCs to industry experts and special guests, we want to provide you with the inside scoop on all things startup investing. Whether you're investing $50 a deal or $500,000 a deal, we have the stories you need to hear before clicking invest. From the metaverse to spaceflight and beyond, join us as we explore the world of startup investing for all. And now, on to this week's episode. Hello, everyone. I am excited to welcome our guest on today's episode, Levi Brackman. Levi is the founder and CEO of Invowns, a really interesting real estate technology investment platform. And they are a startup themselves. And so today we're going to have a little bit of a unique conversation where we dive into both being a startup, but also being a startup kind of in this alternative asset class world where we're trying to democratize access to all of these various new assets that we've never really had good access to. So with that, I am going to kick it over to our guest here today. Levi, thank you so much for joining us here today.
A real pleasure to be here. Thank you so much for having me, Chris.
Absolutely. So Levi, I really love your company. As I already mentioned to you before we started recording, I am a huge kind of fintech junkie, and anyone who's trying to create access to new alternative asset classes, I am all about. So how about we tell people a little bit about what you're up to? And then more interestingly, I want to dive into a little bit of your background because you certainly have a unique path to founding this company.
Thank you. So Invowns is really a marketplace for all kinds of real estate investing and funding. What makes us really different than almost anyone else out there is that you can get financing or raise money from everyone up to and including from retail investors. So in that sense, we're a funding portal, registered with the SEC, we're a member of FINRA, and you can raise capital from anyone. But if you want to raise capital also from the big boys, private equity, family office, etc., on our platform, you can do that too. So really what we've done is we've created a platform where anyone can raise money for real estate from anybody.
That's really cool. So we'll get into that in a minute, but let's take a step back. Pre-founding Invowns, let's talk a little bit about your career path and things you've been up to.
Well, you can maybe see from the background of all the different types of books I have that, I have lots of different interests. I started off actually as a rabbi, and that was my first career. I had a congregation in North London. I ended up being in the nonprofit space. It's pretty natural for a rabbi to go and end up helping kids, etc. Started a nonprofit, which led me into a PhD in psychology to kind of, I was helping kids kind of figure out their purpose in life. And I built this program and people were asking me, well, how do I know it works? I'd love to use this in my school, but how do I know it works? So I signed up for a PhD program, ended up studying a lot of statistics to be able to kind of prove and gather the data and then do the experiments to show that it works. And then as I was getting into that, big data and AI started taking off. This was, 2012, 2013. And I became fascinated by it. I decided I need to learn everything I could about it, which I did. And at some point I realized that if I could really get into big data and really understand how to kind of get information from big data, could be that's like the next frontier of like knowledge. So I wanted to practice that. So I ended up getting a job at a tech company, which took me into technology. So I started off as a data scientist, really kind of building machine learning models from scratch. Within 4 years, I was a senior director at a travel company, reporting into the C-level, which is when I left and started Invowns. But meanwhile, I was investing in real estate. I bought my own house, bought a second house, started investing in real estate, and realized real estate was really powerful. But it really this whole idea really crystallized to me when I was trying to buy a house here in New Haven. I'd moved here and I was renting this house, and I decided I wanted to buy it. My landlord at the time wanted too much money for the property. He wanted, I think, about at least $60,000 more than the property was worth, which seemed to me to be a bit of a risk. So I thought maybe I can find people to invest alongside me. And it turns out there are some companies out there which are willing to kind of buy equity stakes in people's homes. But when I sat down and modeled out the kind of return they were getting and what it was really going to cost me, just with a 3.9% average appreciation rate each year, it ended up being usurious. When I turned it into an APR, an annual percentage rate, it was like 30%. And I was like, wow, these guys, they're killing it. But also it's a bad deal for a homeowner. And I thought to myself, we could create a platform which allowed regular people to offer investments of real estate up on the platform for regular people to invest in. That might bring the cost down on the homeowner side, but it also might offer opportunities, on the investor side, on the retail investor side. And that put me down this path of starting Invowns. Invowns is actually invest and own. So you have an owner on the one side and an investor on the other side, and you bring them together to be able to transact, is what we try to do. We still allow homeowners if they want to, if you want to raise money against your own personal home, you could do that on our platform. But it's not just that now. It's anybody. Big multifamilies. We've got a big multifamily is coming soon up on the platform. We've got a resort and a residential community coming soon on the platform. We had 4 single-family homes as a portfolio up in North Carolina, which just closed, or we just ended the funding for this week on the platform. So there's all types now on the platform, any type of real estate. The key thing is that it's real estate.
So quite the winding career, and good on you for being willing to explore all of the interests and see where they take you. Tell us a little bit about, I'd be curious because there's no one else I could ask about this. What are the similarities between running a startup and being a rabbi?
The way I've seen the arc of my career in general has always been 2 fundamental things. Number one is helping people. I'm an actually curious person. I study the whole time. I have my own focus on things that I study, which aren't related necessarily to business or to real estate. But I'm a naturally curious person, which makes me ask a lot of questions. So I'm curious about people's deals and what they're learning about. I want to help people. So as a rabbi, you have to help people. You have to care about that. And the other thing is you have to be a good communicator. And I like and enjoy writing and communicating and educating. So in this space of what we're doing here, I'm constantly educating people about real estate investing and how they can gain financing and the structures which are out there which can allow them to do it. Because a lot of people just don't understand the Reg CF space, for example. A lot of also people don't understand just how this financing works and how they can use it to their advantage. So a lot of it is talking on podcasts, educating and communicating.
I think that makes a lot of sense. So you've been running Invown. I'm curious, you do all sorts of types of real estate, and it looks like you do have some bigger kind of institutional projects that are getting ready to go. What has been kind of the solidifying factor? How have you convinced these folks who probably have access to other interesting capital channels that they should utilize this new method of raising capital from a broader pool of people? So
there's the people who are coming up on the platform right now are mostly people who have access to these investor bases. Either they've got podcasts, or these are people who've got a large social media following. They're well known in their communities. And they recognize that it's a pool of capital they should tap into, both to benefit those people in their community, but also because it's a good pool of capital for them and their opportunities. So mostly those people who they don't have a way to offer opportunities to their community and their base other than through Reg CF. So that's kind of the value proposition right now, is for people who have access to those people, but 5 or 6 C's, then a lot of them are just not, that they're not accredited. So they want to be able to offer that opportunity to the people who are not accredited. So it's not such a hard sell to those people, because it's an opportunity for them to be able to raise money from a whole new investor class that wasn't open to them previously.
Now, in terms of the types of offerings that you're going to be offering on the platform, are they all debt deals, which is kind of standard returns? Are there going to be equity deals as well? What does that look like?
Yeah, they're mostly equity deals, not debt deals. But we will do a debt deal as well, but it's mostly equity. And the reason is, for debt, if you're selling debt, it's not always a security, I guess. I mean, I'm not a lawyer, but it's not always a security. So you can do it in ways which aren't, you don't require to go through a funding portal.
One of the things that I want to make sure people understand, right? Debt and equity and real estate, obviously very different. Can you talk about some of the benefits of investing into equity in these deals rather than debt?
So debt is just a fixed rate return, right? You'll get, it's basically the interest and no profit sharing. So if the deal does really, really well, you still get your basic return. Whereas if you invest in equity and the deal does really well, so, you have massive appreciation, you have a value add, the property is now more valuable, you'll get that higher return. So there's a little bit more risk, because you're usually behind the debt in terms of if something goes poorly, God forbid, then what will end up happening is that the debt gets paid off first, and then investors in equity get paid second, if perhaps third, depending if there's other kind of debt put up there. But the equity investors get paid last, so there's more risk there. But you also participate in the profit on the deal.
And that's a really important thing to understand is your upside potential is a lot greater, but you also have a built-in downside, which is the fact that debt holders get paid first. And if things kind of go awry, you could ultimately end up not getting paid anything. But the nice thing about real estate is you actually have a real asset, right, that's helping to back it. One of the terms that I have found really helpful as I've started learning more about real estate myself is the loan to value ratio. And I know I've seen people asking about it on your platform for some various deals. Can you talk about what that actually means for folks who are interested in learning more?
Yeah, another way of talking about this is the leverage, right? This is something that people out there might know, is that, a lot of people when Donald Trump was, and he's a real estate guy, when he was president, people were saying, well, he owes all this money to all these banks. And his answer was, I'm severely underlevered. And I don't think anyone knew what that meant, right? But anyone who makes money on real estate, what that means is that they're borrowing against the real estate. That's how you make money in real estate. You go to the bank and you get a loan. Everyone does it to their own home. And if you're buying a big apartment building or a big office building in Manhattan, you're going to borrow a lot of money in order to be able to buy that. And you'll put some of your own money, some of investors' money towards it. Now, the question is, what percentage is debt and what percentage is the actual down payment, if you like? That down payment often doesn't, especially for bigger deals, doesn't just consist of your own money, but it'll consist a little bit of your own money, the person who's running the deal, and investors also come in and invest. So the loan to value we're talking about is how much is the loan compared to the value of the property. So let's say you got $1 million property and you're taking out $700,000 in debt, your loan to value is 70%.
So $700,000 is in debt. You've put down $300,000 in actual payment, so you already own $300,000 of that home. The other $700,000 is owned by the bank.
Yeah.
Okay, so for folks who are interested, they go to Invown, and now they could start checking out different deals. What are the types of deals that you've already had on the platform? What are some of the ones that you see upcoming that you're excited about?
There's a couple which I'm excited about. There's one which is it's a really kind of unique deal. It's run by this lady out of Texas. She's building a Black cultural resort and residential community. So it's for all Black Americans, not African Americans, but all Black Americans, and to celebrate Black culture within that community. And so that's a really interesting kind of real estate kind of deal that she's putting together, and she's raising for on our platform. So I'm really excited about that because it has kind of this double whammy of, on the one hand, it's new and innovative and it's real estate, and it also has a potential to kind of grow into something pretty iconic. So that I'm excited about that one. Then there's two other which are not up there, but there's two other deals which are going to come soon by people who are just pretty well known out there in the real estate space. One guy's a best-selling author. I can't say his name, but he's going to put some deals up there, and people will know who he is. And then there's another guy out there who's got a really a podcast, which is again, I don't want to say his name because he hasn't actually put it there yet, but coming soon. There's a guy who's very well known in the podcast space and a real estate guy who's going to be putting up a deal. So, again, our first few deals are going to be deals where the investors come along with the people on the platform. Always
a smart move, especially when trying to build out these types of platforms. I'm sure many of our listeners are familiar with platforms like Ground Floor and Fundrise that also allow non-accredited investors to get into real estate deals. Talk to us a little bit about some of the differentiators and things that set you apart.
Yeah, so I'm not as familiar with Ground Floor. I think they're debt, right? They're basically a debt platform, which is, I don't know if they feel they're selling securities or not. I don't think they're a funding portal, though. Correct me if I'm wrong.
I believe you're right. I'm not sure as well, but I believe you're correct.
So they're just doing debt. Basically, they're helping people raise debt. Again, equity is a different animal, as we explained, right? You have much more potential opportunity to earn and to have upside when it's dealing with equity. So that's one big differentiator between us and Ground Floor. And then as far as Fundrise is concerned, I mean, what they really have are Reg A Plus offerings So you're buying into a fund. You're basically like buying into a REIT, a real estate investment trust, which they decide exactly what to do with your money and how to invest it and in which deals, etc. So you're putting your money into a pool of money, not into a single asset, which then gets, put into all these other assets, which is also it's a legitimate form of investing in real estate. It's just a different way of investing in real estate. You're not coming onto the platform saying, "Hey, I like this operator or sponsor. I like the deal that they have. I've asked them a few questions and I want to invest in their deal." That's not what you're doing on Fundrise if you're a non-accredited investor. Whereas you will be doing that on Invowns.
Getting to actually select the individual deals and get into exactly what you want to be able to invest in.
And to diversify yourself. You're choosing, I'll do a little bit in that deal, a little bit in the other deal, and with some other deal. And again, you're also diversifying out with different sponsors. So if you go, for example, Arrived Homes, you invest just with Arrived Homes, that's one sponsor, right? Mm-hmm. It's Arrived Homes. Yes, it's multiple asset classes, but it's one sponsor. If you want to diversify out with multiple different sponsors, which is a good idea because sponsors means a lot. You might say if people in this podcast are familiar with sponsors, the same thing as founders, right? If you're looking at startups, so you want to diversify, your sponsors. You can't do that on Arrived Homes. You can do that on Invowns.
One of the challenges, and I don't mean this negatively, it's just one of the challenges that some marketplaces have found is the cost of both acquiring investors and the cost of acquiring deal flow. And one of the challenges with deal flow, from what I've heard as kind of an outsider to the real estate industry, is this idea of, the best deals are still won kind of in like hand-to-hand combat, and you can only apply so much technology. Ultimately, you need boots on the ground winning deals. What is your thoughts on that, and how are you sourcing your deal flow right now?
I don't have investors who are standing on my head saying, you need to grow at all costs. And one thing which I have absolute clarity about, in my view, is that Reg CF is going to be a massive player in real estate. The pool of capital which is out there for regular non-accredited investors is massive, and the appetite to get into real estate is very high. So it's just about, you start off slowly, you get a few deals, people realize they can do that. It's not for everybody. Initially, it's going to be for people who can bring the investors along with them. So in other words, I can't sell people's deals for them. It's illegal for me to, right? I'm not a broker dealer. So if someone comes on and says, "Okay, bring me the investors," I'm like, "You're not for this platform. You have to come on, you have to do the legwork to get the investors, just like you'd have to do on Republic, just like you'd have to do on WeFunder or Start Engine. You're going to have to put some legwork in to get the investors to come along. We'll help you in terms of us marketing the platform, but we can't guarantee that all the investors are going to come for you. But if you're a person who's got a base out there of people who you've already grown and you want to grow further, and you want to offer them opportunities to get in on your deals, Invowns is the place to go. Eventually, once it grows and it becomes, that network effect grows, then other people who come on later will benefit from the fact that there's a lot of investors already kind of on the platform.
I want to go back to something that you said just before we started chatting on this topic, which is this idea of being able to diversify into various sponsors. And I do think it's a really important point. What you're essentially saying is for Arrived Homes, which is another platform where you can invest into rental properties, the sponsor every time, the person executing the deal is in fact Arrived Homes, the business. Right. So they're doing every deal, and so they're managing the entire process, and they're actually managing the real transaction and dealing with the ownership of that home. What Levi and the Inbound team are doing is they're working with sponsors who are doing all of that work. And the sponsor is simply coming here and saying, you can invest alongside us. But it's a lot more passive with people who are active real estate managers rather than investing in an organization where they basically run all of the deals as well, which could be a good thing if they're really good at it, or it could end up being a not so good thing, or at least limit your diversification because it's the same manager on every property.
Yeah. That's my understanding of how they operate. And again, they might come on and say I've misrepresented it, and I don't mean to. It's just my understanding.
Yeah, no, and I do believe you're right. And same thing with Fundrise. They basically are one of the key investors going into each deal, and they're kind of, from my understanding as well, really kind of the manager of that process. So I do think it's unique and valuable to be able to work with lots of different sponsors who are doing deals in various parts of the country. So I think that makes a lot of sense. Last thing I'd like to hear a little bit from you about in terms of your platform, or, in terms of your typical user, investor, person utilizing the platform, what do they typically look like? Who is this person?
It depends on the deal, right? So if you look at the community which has invested or which is, they haven't invested yet because it's a coming soon listing, but the people who've reserved investments in this community, they're from the sponsors community. So a lot of those are people who know the sponsor and are in the African American community and the Black community in Texas. In other deals, it's other types of people. So I think it's pretty diverse, and the sponsors bring along the investors along with them. It's a bit like asking. I use Facebook, although Facebook's like ancient, but TikTok, whatever, as an example, right? Who's if you ask someone who's their followers on TikTok, well, if they're doing dances, and they're 18-year-old, then it's other 18-year-olds, right, or 20-year-olds, and maybe some other people who like hang on. But then if you're talking about something much more serious, then it might be a different audience. So there's so many micro audiences within a platform like this that it's difficult to say what your typical one is. And at Invowns, we want to grow into that kind of. There's going to be different sponsors who bring on different audiences to their deals and then cultivate those audiences on the platform. So I don't think it's a typical user. It's it's going to eventually you'll have crossover, right? But each sponsor will have their audience.
I'm glad you said that because it gets at something that I think is really important as well, which is this is about community capital. It's about bringing people who are in and around you and live in your communities and having them partake in the upside of the things you're working on. But it truly is a community-driven effort. And I do think that's something that's really important and valuable here. You've talked about Reg CF becoming a very important player in real estate, and you've talked about this idea of community capital becoming a more important thing. What are your views on kind of what the next, call it, 3 to 5 years, crystal ball thoughts on what happens to the real estate industry as it pertains to kind of Reg CF and these community capital raises?
What's happened over the last year is that Reg CF was capped at $1 million up until 15th of March 2021. So for a lot of real estate deals, that just wasn't enough money to kind of move any needle. That went up to $5 million to become so much more relevant. Now you have to bring the sponsors along and say, hey, there's another avenue. You don't have to do 5 or 6 Cs or 5 or 6 Bs, but you can do Reg CFs, and there's a whole infrastructure which is now built. We are at the forefront of building an infrastructure to allow people now to raise money using Reg CF. You can also do 5 or 6 Cs on our platform, by the way. You can also do not 5 or 6 Bs, but you could do you can raise money from family offices on our platform as well. But our differentiator is that you can raise Reg CF funding from anybody on our platform. And as that becomes something which sponsors become aware of and understand what that is, and their ability to cultivate a whole new audience of investors, you'll find syndicators flocking to it. So it's going to become very, very big. And we're not going to be the only player playing in it. There's going to be a lot of others as well. We're one of the first and the most successful at it. So that's the goal. It's a really, really exciting space. I always say this, like up market or down market, right? In real estate, there's always good real estate deals and bad real estate deals. And it doesn't really matter what the market is, right? You just have to understand the deal and the numbers. It either works or it doesn't. So even in down markets, there are good deals. Even in up markets, there are good deals. There are probably more good deals in down markets than up markets, ironically. But as things start to change, it becomes really, really exciting and interesting for this kind of Reg CF platform.
Well, this has been a really illuminating and helpful conversation for those who want to utilize your platform and become an investor on the platform or a sponsor looking to potentially raise from their own community. Where can they go? What steps can they take?
Yeah, Invowns.com is where they should go. And just sign up on the platform. It's really pretty self-explanatory. Or just reach out to me. You can reach out to me if you've got any questions. Reach out to me. It's Levi, Levi at Invowns.com, INVOWN. Stands for Invest and Own. It's a two-sided platform for investors and owners. Invowns.com, and I'll be happy to answer any question. You can also go on the website and there's a little chat box, and you can chat through there, and we'll get back to you that way too.
Wonderful. Well, this has certainly been a first. I think you are the first and maybe only rabbi turned real estate tech platform founder, which I think is just so cool. I genuinely appreciate your time. Thank you for your insights. And you heard it here first. If you'd like to go check them out, Invown.com, INVOWN.com. Thank you so much for the time today. It's been a pleasure. Thank you so much for listening to another episode of Inside Startup Investing. Before you go, if you enjoyed the show, please give us a like or a positive review on Apple, Spotify, or wherever you listen to podcasts. And be sure to like and share our latest episodes. And if you like what you heard and want to learn more about how we can help you manage your startup investing search, diligence, and management at KingsCrowd, check us out at kingscrowd.com. Thanks, and until next time, happy investing.